The week ahead. For the last 3 months, this market has been in a very tight trading range. There is no meaningful excess on the high. There is no meaningful excess on the low. One of the things that amazes me, we do these short-term trading programs every weekend. But yet, when I read some of the comments, people are adamant that the market's not random. The market's going up. The market's going down. As a short-term trader, when you get yourself locked into, this solid position, it's going up or it's going down, the chances of you being profitable are very, very light. This market is in a trading range. It has been I've been doing this for over 50 years. This has been, without a question, the best trading period I've ever had. And the reason being is I'm a short-term trader, and the market has been very accommodating for short-term traders. Again, I will remind you that as a short-term trader, particularly when the market is trading sideways, as it has been for 3 months, inventory constantly gets too long, and then you get liquidation breaks. It constantly gets too short, and you get short covering rallies. And that's part of what being a trader is. If you get fixed on which way the market's going, you lose that mental flexibility that is needed to be a trader. For example, Thursday night, the market broke sharply. We opened up on Friday morning. We tested those lows. It went right down to an exacting level. And then the market rallied for, a good portion of the day. Then we had a late break in the market. And I'm going to come back and talk about where that late break started from, because it's very important. But what I want you to just appreciate, this market is going nowhere. It is moving sideways. Now, it will break out of here eventually. The longer the market has moved sideways, the greater the odds that a move from that trading range will be dynamic. But also remember that the same trading rules we apply to short-term trading are also applicable to longer-term trading or longer-term moves in the market. For example, this market has moved sideways for months. If the market breaks to the downside, go with it. If the market breaks to the downside and rejects it and returns back to the trading range, the chances are it can move back to the upper extreme. The same as if it breaks to the upside, go with it. It breaks to the upside and fails, then the odds are it's going to attempt to rotate back down to the opposite extreme. But it is important to understand what kind of a market we are in, to understand that you have to adjust to the market. The market is not going to adjust to you. Okay, now I want to move over and I want to take a look at the daily profile, because there's a nuance in here that I want to make sure that you are aware of. As a short-term trader, nuances matter. The market yesterday morning, rallied up to the high. And the high, I believe that is the 100-day, almost exactly at the 100-day moving average. Look at the rally from Thursday afternoon. The rally from Thursday afternoon was to exactly the same place of the rally yesterday afternoon. What this tells me is the selling here was very mechanical by very short-term traders. So all you got market got too short in the morning, you got a short covering rally, and then the market continued as the momentum traders jumped on board. The market got too long. then you were subject to a late liquidation break. The odds of coming back to here must be considered. Does it have to do that? No. But you want to carry this information forward because the Thursday afternoon rally high and Friday's high are exactly the same. They're exactly at a mechanical reference. Keep that in mind when you look at this market. Where we are now, we're open, someplace in about the middle of the range for Friday. We've got a lot of politics going on. We've got a government shutdown. We've got volatility in the market. Go with the market. There is no direction to the market. You can say that short-term trend is down because we're, the lower end of the 3-month trading range. But stay objective. Remember what we are doing. We are short-term traders. This message is about short-term trading. It is not about trends or anything else. Now, there may be a point in time where I talk about trends, but that's not what's going on right now. Keep an open mind, keep mental flexibility, and remember there's constant randomness in the market. Have a great trading week. We'll see you next weekend. Thank you.